The following is paid programming.
It's time to talk taxes.
New friends, new opportunities, new partners. EG Tax.
It's Ask the Tax Lady with Esther Gulius and EG Tax on News Radio 930 WBEN. To reach Esther now, call 803-0930. Toll free at 1-800-616-9236. And cell calls are free at star 930. And now, live from the WBEN studios, it's Esther Gulius.
Hey everybody, this is the Tax Lady, and this is our hour to talk taxes. And if you have any questions, you realize that we just got about 4 weeks left to go until 2020's wrapped up. We may be glad that 2020's wrapped up, but got about a month to make some moves that will affect your tax return because everything closes as of 12/31. Our phone number here in studio is 803-0930, 803-0930, star 930 on a cell phone. You can text us at 716-803-0930. And, of course, we have Chris Fabian in studio. He was just helping the financial guys. Hey, Chris.
Hey there, Esther.
And Tiffany Fabian. Hey, Tiff.
Hey there, Esther. Happy Saturday.
Happy Saturday. Okay, so before we get started, and we're going to tell you things that you really need to think about. Here's the thing. You can bury your head in the sand and say, oh, well, I didn't know about it. And once January the 1st happens, it's too late, and the die is cast. And what's especially concerning this year is we really don't know what's going to happen in 2021 with this runoff in Georgia. If there should be a change in the Senate so that there's no longer a Republican majority in the Senate, that would mean there would be a Democratic majority in the House, the Senate, and obviously the White House if Biden gets sworn in. That would mean there'd be they could do a run on whatever they want. And obviously we talked last week about all the tax law changes that are being proposed and all the increase in taxes that are being proposed. And as New Yorkers, that should concern us because we pay a lot of taxes.
Yep.
So
I can't tell
those
you
are
this
things
week
that we want to talk about too. Yeah,
I can't tell you this week at the office how many people called about your show last week about the stepped up basis. We were inundated with calls. It was really eye-opening.
That elimination of the stepped up basis, and again, it has to go through Congress, but again, it's like a hot knife through butter if they got all branches of government, and especially if they change the Supreme Court.
Yep.
The balance of the Supreme Court, there's nothing that would stop a complete run on whatever Democratic things that the party wants to do. So, the balance of power and that kind of a shift to make sure that there's checks and balances that wouldn't be there anymore. So it's something that we want to make sure that we do. And I will tell you, the only thing you can be sure of is as of 12/31 of 2020, that is the tax law that we're dealing with. I don't know what's going to happen next year.
Right.
Well
said.
Something that is going to happen next year for sure is that your PPP, those of you small business owners that had payroll protection and you got that money from the SBA, those SBA loans, if you've spent the money the way it's supposed to be spent on payroll and paying your expenses for your operating your business, if that money's gone, put your PPP application to have that forgiven from a loan to a grant. And if you need help with that, EG Tax will help you. That's a big deal.
That's a huge deal. I mean, you take somebody who we'll even say got like $100,000 and okay, well, I'd rather have the write-offs. Well, that $100,000 might save them $20,000 in taxes. So it's going to cost them $80,000 of their own money to save $20,000 on taxes. I'd rather keep the $100,000 in my pocket.
And that's assuming that they had a profit this year.
Right.
There's so many small businesses. The small businesses that got the PPP loans, they're struggling, and they may have a loss this year. And so if they don't go ahead and apply for the money to turn into grant money, and that $100,000, for instance, stays a loan, and they've lost money, it's not going to help them very much.
Yeah, and and the key thing, like you said, it's a loan where maybe down the road they're trying to get better and build up and maybe expand a little, and they go get a loan for and they can't because they already have this other loan out there.
Right.
So
it's a simple procedure. If you need any help with that, we have a complete department that'll help you with your application to change from the loan of payroll protection to a grant. You basically submit your information to the bank that loaned the money. They go over it, make sure that you dotted your I's, crossed your T's. Then that goes off to the SBA. The SBA then says it's now been forgiven, and it's a glorious thing. So those of you that have gotten PPP money, or if you know anybody that got PPP money, you want to turn it into a grant, and the move is now on you.
Yep. And if you guys have questions out there, give us a call here, 803-0930 now, or during the week at our office at 632-7886.
Right, that's at our corporate office.
Yep.
All right, so we want to make sure that, and let's say, and nobody likes looking at bad news, especially if you've been so negatively affected by COVID in your business, you're running on a shoestring, and you maybe owe money from last year. We have an offer and compromise department, and Tiff, you had that up. Why don't you explain what the offer and compromise is, and tell people that we can help them with that too.
Yep, I get several phone calls about this a week, and it's my honor and my privilege to help people. So if you owe thousands and thousands and thousands of dollars, you hear those commercials all the time where you pay pennies on the dollar. Well, we do that same thing. I head up the program, and it's a great opportunity where you pay pennies on the dollar. Somebody maybe owes $60,000 to the IRS or New York State, and we offer $900. And their debt is gone. There's no more tax liens, no more judgments, no more garnishing pays. Your driver's license is free and clear, and liens against your property.
You can lose your driver's license if you owe the state of New York money.
Yep. So
but the thing is, you can't. You got to be between a rock and a hard place.
Yep.
You can't. In order to qualify for the pay,
it's doubt to collectability.
You cannot be able to pay the debt, and there are people that are having their wages garnished right now that can't. For the federal government.
I got to tell you, Esther, there's no better time than right now to do an offer and compromise because
everything's so upside
down. And people have lost their jobs. I was doing a salesperson's offer and compromise the other day. His income has been slashed in half, and he doesn't know if it'll ever return to back where it is. So we did an offer and compromise. I mean, make hay while the sun shines.
That's true. And again, if you say, because let's face it, you'd have to really look at the bad news. And if you're somebody that's behind the eight ball in your taxes you owe, or maybe you haven't filed because you owe taxes, we get you straightened out. If you can't pay, they forgive the debt, but unfortunately, they don't forgive the taxes unless you prove to them you can't pay them, and that's what the offer and compromise is all about. Federal and New York State. So if you owe money, we can help.
And the last thing I've got to say is those big companies that advertise charge you thousands of dollars. Our fees are in the hundreds, and I even tell people when they come in for counseling, I'm like, I can tell you the forms, and you could do it yourself. And usually, invariably, people say no, but I just give you all the options.
Right.
And sometimes I'll
use a form 656, and then what is the
433A?
Right. So if you what we
and
want
I always
to do
type up a letter.
Taxes, we want to be your advocate. We're going to tell you things that maybe somebody else is hiding under a bushel basket because they'd like the big fees. More than anything, for us, we want to make sure that we have a healthy taxpayer constituent in Western New York. We want to make sure that we give you information that you won't get anyplace else.
I also got to say, those big companies, I feel like I'm listening to people. They string you along. And they never do anything. I will have it done in 2 appointments, won't I, Chris?
Yep.
I just get it done right away. I learned from my mom, just get it done.
Get her done.
Right.
I'm Esther Gulias, the tax lady. 8030930, 8030930, star 930 on a cell phone. Text us at 716-8030930. We're going to be back on the other side. We're going to take a short break. We're going to be back on the other side with things you need to know before the end of the year. I'm Esther Gulias. Talk to you in a minute. Hey, to us, you are family, and I want you to think about EG Tax as your friend because we sure want to help you. And our phone number here in studio to help, 8030930, 8030930, star 930, and a cell phone. Before we get to our first set of callers, though, all right, so here's the beginning of things you need to know. When you're at your Christmas parties, or I guess you really can't have parties, if you're standing out in the driveway.
Your Zoom
Christmas
parties.
time, yeah, you are not required this year if you're over the age of 70 and a half, 72 since the change in the law. No required minimum distributions for 2020. Now, right now, as far as we can see in 2021, it looks like they're going to go back to the way they were unless this thing lingers on and they change the law and don't require RMDs for 2021. But for 2020, no required minimum distribution.
Yeah.
Right. And if you, and I know I answered 2 calls on this last week, if you did take it out, it's still taxable.
Right.
Yeah. And then another thing is you might want to take your RMD because you're below the filing threshold and you won't pay any tax.
And that's where knowledge is king. If you're somebody who is maybe married filing joint return, both of you are over the age of 65, and you have very little income except for Social Security, and you're sitting there with an IRA or a 401k, and you haven't been taking it out, you might want to take it out because you wouldn't pay taxes on it anyway. So that's where, give us a call. We'll help you with that. So 8030930, 8030930, star 930 on a cell phone, and we have Ted. Hey, Ted, how can we help you, sir?
Hi, sir. I applied for my PPP loan, and I got it notified by M&T Bank that it was approved and that it's been forgiven. So does that mean now it has become a grant, or do I have to ask it to become a grant?
Okay, you got the loan, and then without filing for the application, they said it was forgiven?
Or did you fill out the application?
Got my money, back in April, got my money in April. I used all the money for my payroll, none of the other bills, just payroll only. And they on October or November, they opened up the bank website to apply for forgiveness.
Right.
I applied for forgiveness. I was notified the 4th.
Oh, then you're good. You did it. So you applied for forgiveness.
Great.
It's that second part that's so important, Ted. There are people that have gotten the PPP money who have not applied for forgiveness, but you, my son, are forgiven. That's a good thing.
Esther, I'm 68.
Yay! All right. Hey, Ted, thanks for calling, and that's great. And so what Ted did, Ted is our star pupil here. He got the PPP money, and he applied for forgiveness, and he's been forgiven. And that's what we want to make sure, that you are forgiven. I mean, I feel like I'm a minister. I'm preaching a sermon. Being forgiven
Just say
is a
5
very
Hail
important
Marys.
thing. Right. I'm Esther Gillius, the tax lady, 8030930, 8030930, star 930 to cell phone. Text us at 716-8030930. All right, now the net operating losses, they said that you couldn't go back originally when they changed the law. Then there was the CARES Act that said, if things are so bad in your business that you're losing money, we are going to allow you to go back and recoup those losses using a net operating loss. So again, if you're a business that's been struggling and you're pretty sure you lost money, it's a really good thing to do. I mean, if you aren't doing business, you may as well take a look at your accounting and see if you're going to end up with a net operating loss. That means that you actually spent more money than you took in. You are allowed to carry that back 5 years and carry it forward indefinitely.
Yeah.
So for the years that the loss occurred.
I can't tell you.
So you can get your money back from the years when you were making money.
Yep. I can't tell you how many businesses are affected by what happened. I was at Subway today. I was getting a Subway sandwich, and the owner, she's huge. She owns a Subway, and her husband is a Carnival owner. And she said they are both just way under, and they just don't know how they're going to see the light from after this all hopefully goes, south.
And that's where, taxes are something we don't like paying, but if you've already paid them in the past, because if you had a successful business, you did pay taxes, now they're giving you an opportunity to recoup the taxes you paid by the losses you're incurring now. So if you're a small business owner and you know you've lost money, you'd want to get to the water trough first thing when tax season opens up on January the 18th, because you'd be able to get your money back from 2015. And let's say you lost $100,000. Well, you might be getting $20,000 plus interest in refunds. So this is especially important to you.
Right, definitely.
The other thing is, should you be like, there are some businesses that are busier than a one-arm paper hanger right now, I'll tell you. So, and they've done very well. If you're, like, for instance, the UPS and who else?
Cleaning companies.
It's interesting because I
Amazon.
wanted a treadmill.
Alarm systems.
Right, and I wanted a treadmill, and
Homes.
because all of the facilities to exercise are closed down, there are no treadmills and exercise equipment. And these poor business owners that are trying to sell fitness equipment, they're having a tough time, but they are selling it. They got everything sold. So if you're in a business that's done well during COVID, you want to make sure that you take advantage of the 100% depreciation that's available in the CARES Act. So you would want to make sure that you buy assets before 12/31 to eliminate the taxes that you'd have to pay. So these, again, are all planning issues that would be very important to you. I'm Esther Golias, the tax lady, 8030930, 8030930, star 930 on your cell phone, and we're going to go back to the phones, and we're going to go talk to
Al.
Al. Hey, Al.
Yes, hi Esther. I'm 70 years old, and I have an IRA rollover, and I
Okay.
took out $15,000, and I withheld 10% state and 10% Fed. Is correct?
All right. Well, first of all, do you have other forms of income, Al, besides the your Social Security and your IRA? Or
Pension and Social Security, and also annuity.
okay, so you've taken money out of your pension?
Well, no, I didn't take any money out of my pension.
All right. So you took no pension withdrawal.
Right.
You got your Social Security, and all you took out was the $15,000 from your IRA.
And then you get your pension every month, right, Al?
Yes,
Okay. So how much are we talking about in a monthly pension?
1,000,
How much?
10,000.
A month.
Or a year.
No, a year.
Okay. So you got the $10,000 pension, $15,000 IRA,
Yes,
so 25 plus your Social Security.
Are you married?
35,000 a year for my pension and Social Security.
How much is your Social Security?
Just over 2,000 a month.
All right, so let's back off your Social Security. So you have 10,000 in a pension, 15,000 in an IRA, right?
Yes,
And your Social Security. Are you married or single?
single.
Okay, so he's going to have a small liability because he's going to get the extra standard deduction for being over 65. And on the state of New York, is that a New York pension, private pension?
No, private company.
All right, so the first $20,000 on the state is going to be tax-free. So you're going to get a refund on the state for sure. On the federal, you're in the 10% bracket because part of your Social Security is going to be taxable as well. But you didn't need to take money out of your IRA if you were age 70 and a half, which you weren't. So you just took it out because you wanted to take it out.
Yeah.
So, but it sounds like you're in good shape on the federal. On the state, it looks like you're going to get a refund.
Oh, okay.
Okay?
Okay, thank you, Esther.
Hey, thanks for calling.
Bye.
Okay, bye-bye. I'm Esther Golias, the tax lady, 8030930, 8030930, star 930 on a cell phone. But you see, if he didn't have, if he wouldn't have had that second pension, if he had only had the $15,000 and his Social Security, then most of that would have been tax-free.
Right. Yeah, he'd have very little
Especially
tax.
if he were married,
Yep.
he would, that's where if you got a $10,000 pension and your Social Security, you wouldn't pay any taxes on your pension or your Social Security.
Are you telling Al to go get married?
I don't know. No, I'm not. The first person I said you need to get saved, now you need to get married? Okay. I'm Esther Gulius, the tax lady from EG Tax, 8030930, 8030930. Star 930 on your cell phone. We're going to go to Tim. Hi, Tim.
Hi, Esther. Thank you for taking my call.
My pleasure. What can we help you with?
I have a dilemma. It's a good one, but it may turn out to be bad. On Thursday of this past week, I was notified that I was selected to be one of 4 winners of a prize for an online language learning website. It's a legitimate company. It's a legitimate winning. And I don't know what to do because...
Well, how much did you win?
It's supposed to be, they put the value at $3,500.
Okay.
And so I'm just wondering...
All right. Well, first of all, do you know when you're going to get your winnings?
Scotland.
Do you know when you're going to get your winnings?
I don't know yet. Monday should be the date that they are going to set everything up if I do actually accept it. And that's...
All right. Well, there's no reason you wouldn't accept it. I mean, if you get $3,500...
You want to hold over to the break?
Well, in a minute I will. If you get $3,500, I know we got the news coming up. It's only going to be partially taxable. And if you can hang on to the other side of the news, we'll go on with this on the other side. Can we do that?
Oh, I put him on hold already.
All right. We'll see you on the other side. I'm Esther Gulius, the tax lady, and to us, your family. And so if you're ever in a conundrum, you think, I wonder what the heck, I think I'll just go online and go to egtax.com, ask the tax lady, and we'll be happy to help you. Getting back to our friend here who thinks that he's getting $3,500, and he doesn't know if he really wants the money. First of all, it's offshore. And so you really got to make sure that they're going to send you the money. If they're asking for money to get money, I would be very suspicious. But if you win $3,500 and you're in the 10% bracket, it means you pay $350 in taxes, but you get the $3,500. So that's a good deal. So anytime somebody's going to give you taxable income, even though you're paying taxes, you still end up making money. So that's what I'd suggest. Okay?
It's not money. There's no
not money.
involved.
What is it?
What it is, it's access to the content of their website, and the content.
All right, so you're getting a benefit.
Yes, because I'm.
Well, then it's still
from that.
If you're getting a benefit, then it's still
Taxable
taxable income.
Okay, and are there particular forms that I have to do? And also, in the event that they tax me at their end. Say in Scotland.
Then you get a credit on your federal return for taxes paid to Ireland. You said it's Irish, right?
It's Scotland.
Scotland. All right. So you would get you'd get a foreign tax credit for taxes paid to Scotland. It would just be you'd claim the income or the fair market value of what benefits you're receiving as miscellaneous income, and assuming that you're going to make that benefit, it would be worthwhile because you'd only pay a very small amount of taxes on that benefit.
And it goes
now,
on.
I wouldn't take the benefit if I'm not going to utilize it.
It goes on line 8, Schedule 1, other income.
Of the 1040.
Tim, Schedule 1 attached
But
to the
again, if
1040.
you have any questions, Tim, I mean, this is our very brief encounter, but if you want specifics, you can call us anytime. We'll be very happy to help you.
Really appreciate your help and your.
Hey, that's all right. Enjoy the access.
Benefit.
Right? I'm Esther Gulius, the tax lady, 8030930, 8030930, star 930 on your cell phone. We have Linda. Hey, Linda, how can we help you?
Hi, I just have a quick question. Do you think that filing dates for taxes will be changed for 2020 because of...
Linda, I pray to God it's not. You know, one of the things where we're getting our team together, you know, we're talking
made
about
some phone calls.
being safe and making sure you make the clients safe and doing remote and taking drop-offs and seeing clients in person.
Putting
One of the
plexiglass.
things that we're really concerned about is that there would be flexibility with our staff because we really don't know what's going to happen. Right now, it's supposed to be April the 15th.
Yeah, and we made some phone calls, and they said the filing date is still January 15th, January 20th for start date. So they said everything is a go.
Oh,
Right.
okay. I love your.
And obviously, you want to make sure if you got money coming back that, especially with people needing their refunds, you want to make sure that you get your tax return done as soon as possible.
Thank you for saying you
Okay.
like our show,
All
too.
right, thanks, Linda. We appreciate it. And let's go back to the phones. We're going to talk to Doug. Hi, Doug.
Hi, Esther. Thank you for taking my call.
Yeah, what can we help you with?
Well, I was talking with a friend of mine about my situation. I'm over 70. I am still working. I have a substantial income. I have an RMD which is six figures actually.
You know you didn't have to take it this year.
I did not.
Oh, attaboy.
So I mean, my IRMA on my Medicare is enough to choke a horse. But in any event,
Well, what a lovely problem to have.
When did you take out your minimum?
He didn't take it.
I did it last year. I didn't.
Oh, you didn't do it yet. Okay, I thought. Okay.
No. But I'm still working. I have a profitable business and I do well. And my wife is a retired teacher, and I waited till 70 for my Social Security, yada yada yada. But here's my question: because I'm still working, I'm still eligible to make an IRA contribution or SEP contribution. But it seems silly to me to be putting in money only to be taxed later, and I don't expect that I'm going to be ending my work life anytime soon. So, if someone suggested to me, and I never heard of this, that I could make a non-deductible IRA contribution of $7,000 in my and my wife's name, and then roll it over to a Roth.
Yeah, it's called a backdoor Roth.
Right. You could do that.
Roth.
Yep.
Right.
And that I'm better off, even though I get no tax benefit. At least the monies that I'm putting into a Roth wouldn't be taxable later on.
Well, that's what I mean. That right now, the way the tax law is written, that would be correct. And when you're an upper income person, such as yourself, and when you're looking at the possibility that there's going to be substantially more taxes, a backdoor Roth might
Right.
be just the thing for you.
Okay, so that,
Or
do
if
you-
you have your own business, you could do an SEP and you could do an SEP Roth,
and
which would be even more money.
or $7,000.
No. An SEP
Would be
Go on, Chris.
I was going to say it would be about 20% of your net profit.
Right.
But is that not deductible then?
If you're doing a Roth SEP, basically the designation would be if it's traditional or a Roth, and in any of the vehicles, whether it be an IRA, 403B, 401k, you can designate any of those to be Roths.
Okay.
So that would be much better for you. It wouldn't be deductible, but you could put a lot more money into the tax-free vehicle.
So I would have to have it titled properly, right? It'd be like whatever.
Well, it's something you would open up. Are you doing an SEP at work?
I have been, yes. For
Okay, so now just make the designation, change it at your investment company to a Roth.
So I had to go through Fidelity for my investment. So I would have to open up a separate Roth SEP.
SEP, because you don't want to commingle them. That's for sure.
Right. I know that, and then okay. So that I could do 20% of my net income
Right.
then.
Now, does your wife work for you?
No, she does not. She's
All right.
retired.
So just another. This might be interesting. If you wanted to hire your wife, you could, as an employee benefit, have the health insurance go to your employee, who would be your wife, and you could also make a cafeteria plan that says that you're picking up all of the medical expenses for your employees, which would be your wife, and then that would be a deduction against your business. So that's another angle you might play.
Well, the good news only gets better for me. My wife is a retired Buffalo teacher, and
Well, but that's all right. You can still hire her. She must be hireable.
yeah,
Right.
Oh yeah.
I mean, the person you'd love to hire would be your spouse, because there are all kinds of benefits if you should want to pay for the medical expenses of your employee, who then would be their family, who would then be you.
Okay.
So what I suggest you do is give us a jingle. We have an affiliation with a group of people, a professional group that specializes in hiring, doing the health insurance program with your spouse through a business.
Nope.
His name, Chris? What is his name? You know?
His name is Charles. I just can't think of his last name right off the top
if
of
you
my
give us a call, we'll put you in contact with him. It probably could save you
the
thousands and thousands and thousands of dollars.
Yeah, give us a call on Monday and we'll get you in contact with
All
him.
right?
So a SEP Roth plan is what I should set up. SEP.
Well, you might want to do a lot more than that, but yeah, I would do the SEP for sure.
Okay. All right. Well, it seems to get a taxable deduction only to pay taxes on the money later when I don't foresee the end of my working life, and it's, you know.
Well, the other thing, another way to look at it would be that you're alive now, you're getting the deduction now. If you're in the 40% bracket and you're putting $20,000 away, you save $8,000 now because you're alive now. And then later on, your children inherit it, and they'd have to pay the taxes.
Yeah. No, I know that, but I mean, I'm.
It all depends on everybody's perspective on this is different. But for me, I'm kind of a defer, die kind of person. And there are those people that would prefer that their heirs not pay any taxes. So, but I will tell you what's coming down the pike looks like big tax increases, and I never was a big Roth proponent. But I'm beginning to think if they don't change the law on what's going to be taxable, the Roth might be something you want to look at, especially if you're upper income.
I have substantial capital gains and joint and individual accounts.
Okay.
Like that.
Hey, well, give us a jingle so we can help you out, okay?
Okay, thanks.
Thanks for your call. I'm Esther Gilius, the tax lady from EG Tax, 8030930, 8030930. I know we have callers, but I want to make sure that we, if you have time, you have the last of the year, make sure you load up your 401k plan at work. Especially if you were lucky enough to have your job with an employer match, that would be something you want to make sure you do before the end of the year. If you're an employer and you've been paying the FICA, you understand that half of the FICA can be pushed off until December of 2021, and the other half till 2022. There's also a employer retention credit of up to $5,000 per employee if you have been affected by COVID. Everybody that has been doing charity, you can take up to $300 as a direct deduction this year without itemizing. That's another change in the law. So those are just some of the things that are coming down the pike. There's lots and lots and lots of stuff. Okay, so who do we have here next?
We've got Anita.
Hey, Anita. How are you, Anita? How can we help you?
Hi, Esther. This is Anita.
Hi.
I don't know if I can get all these questions in today, but it's in regard to retirement, how to invest and what to do after retirement. Okay. Before we do our taxes, I'd like to look into that. Is there any way we could get together to discuss that?
Oh, sure. All you have to do is call the office, 632-7886.
And they'll make an appointment.
Make an appointment. There's no charge. Love to talk to you and give you some pointers.
Okay. I've been trying to get you for quite a few weeks, so hopefully I can do that.
Yeah, just if you call and talk to Tammy, she'll make you the appointment.
Who is that, Kathy?
Tammy. Yeah, I think Esther has openings next Friday.
Right.
Well, that would be perfect.
Okay. We'll look forward to meeting you in person.
And if you can't get through, ask for Tammy to page me, Tiffany, and we'll get you in, okay?
Okay. Thank you very much.
Okay. Thanks, Anita. Enjoy your retirement.
Okay, and then we have a text.
We have a text and then a caller. The text says, if I sell a classic car for $5,000 to a private party, do I have to claim it on my income tax return? Schedule D.
All right, let's make this guy's day. All right, so tell him about the classic car.
Well, if he paid more than $5,000 for it, that he could possibly have a loss to report on his tax return if it's truly a classic and it was held for an investment.
As an investment.
If it was just your personal car and you sold it for a loss, you can't claim the loss. But if you bought the car for $2,000, so I wonder if it's $50,000. I'm just looking at the text. But if you sold it for a profit, the profit would be subject to a tax. And if it's a collectible, then he's got to pay 28% tax on it.
Exactly right. Right. So when you're selling an investment vehicle, any type of investment property, then and you sell it at a loss, then it's deductible up to $3,000 against other income. If you sell it at a gain, it is taxable. If it's a collectible, then it's a 28% tax. So yes, you have to report it.
Right. Yeah, if you need more help, I know it's fast over the radio. Give us a call during the week, and we can go over things.
Right. All right. You know what? I know we have calls holding, but we got to take a short break. We'll be back with your calls from Christine and your calls on the other side. I'm Esther Gilius, the tax lady. Talk to you in a minute. Hey, we are family. We think of you as family. I'm Esther Gilius, tax lady from EG Tax. I don't know if if you're listening to the show, you can hear we care. And you can go about and do part of it right, but if you don't know all the angles, it's like playing pool with a pool shark. If you don't know the angles, you're not going to sink the winning ball. And so we want to help you. So if you think that there's something that you need to talk to somebody about, don't just guess. Don't rely on you learning all the tax code. You can't. I mean, it's difficult enough for us because it keeps changing, and it's going to change again, I might add. Give EG Tax a call. We sure want to help you. And I know we have calls holding, but I wanted to make sure I talked to people about if you are somebody that really did not work much this year, and maybe the bulk of your income came from unemployment, and you have children that live in your home, and you're used to getting the earned income credit, you will not get the earned income credit if you don't have wages. So if you can do any kind of wages before the end of the year, you without wages you won't get the earned income credit and some of the other refundable credits. It's really, really important. And many times people didn't have any withholding off of their unemployment, and they're going to find with these large figures that they've gotten, and they may extend it again. They might come up with another stimulus package before the end of the year, that you're going to owe money. So don't be blindsided. You can give us a call. We're very happy to help you.
Right. And if you're listening and you have college kids who collected unemployment, they're going to be subject.
Oh, my God, yes. I've been counseling so many of that. Yeah.
They're going to be subject to kiddie tax, which means your child is going to pay tax on that unemployment at your rate. So if you're in the 24% bracket, then they're going to pay 24% tax on that unemployment they received.
Very good point, Chris.
That's right. And again, you may not be able to itemize on the federal, but you can on New York State. So many people that think they can't itemize anymore, that's not correct. On the state of New York, what isn't it? There's all this decoupling between New York State and the federal. Now they may couple back together once it's more on everybody's on the same blue table, as opposed to red and blue. But right now, the state of New York keeps decoupling with the federal government, so you can't itemize on the state many times where you couldn't on the federal. And let's go to Christine. Hi, Christine. How can we help you?
Hi. Listen, this is an old question or old problem, but I'm calling for a friend, and it has to do with the first stimulus that we did receive. Okay, she is a Canadian citizen. She does live in Canada right now, but she and her husband did work in the States, and she has been receiving a Social Security check. So is she entitled to the stimulus that we had for $1,200?
Chris?
So is she a U.S. citizen or is she a Canadian citizen?
Canadian citizen.
Then she wouldn't qualify.
Correct.
Okay, we kind of thought that, but yet because she worked and does get a Social Security check, we thought maybe she was.
But this stimulus package was for U.S. citizens.
Okay.
But speaking to stimulus and people getting stimulus package. Remember, the stimulus money was tax-free, unemployment's taxable, and there's going to be an opportunity. It's called a reconciliation credit on the federal return this year when you're filing, where if you didn't get all that you were entitled to when you file your tax return for 2020, it's going to ask you how much stimulus money did you get and for whom. And if you're entitled to more because they took a kind of a guess at it, you're going to get extra money. And if your income went down in 2020 and you didn't get it in 2019 because your income is too high, they're going to give it to you again. So this is going to be a very, very popular form worksheet, actually. Once you're doing the 2020 tax return, it's going to be a stimulus reconciliation credit.
Yeah, she does file income tax.
Yeah.
Right.
Yeah, but the thing is, Christine,
right.
yeah, she has an ITIN instead of a Social Security number.
Right.
Oh, okay.
And that's what will make her not eligible for the stimulus.
I have a Social Security number.
Well, it's 9 digits, but it's called an ITIN.
Right.
Oh, okay. So anyway, the bottom line is because she is a Canadian citizen, even though she gets a Social Security check from the United States, she was not entitled to.
That's right, because she paid into Social Security.
Okay. All righty.
Okay.
Good
Hey,
question.
thanks a lot, Christine. Let's go to our last text there, Tiff.
Yep, it says, love your show, very educational and highly useful. Can you tell me if we take more money to Roth IRA, can we take more money to Roth? My wife and I are both retired, both over 65, did not take our RMD, moved 61K to a Roth. Social Security is 36,000, interest 9K, capital gains 19K. Can we move more to a Roth without going into a higher tax bracket?
Well, we'd have to take a look at everything, but you realize moving your money from a traditional to a Roth is going to cost you money, federal and state as
that's going to make 85% of their Social Security taxable.
And then don't forget about the
but
extra
once they
Medicaid
hit that
tax.
figure, that 85%, it depends on how much hurt they want. But if they're in the 25% bracket and they do another $20,000, it's going to cost them another $4,000 in taxes. So it all depends on how much you want to pay up front.
Yeah, they might be going from 12 to 22, so that extra 10% may be a little bit more than they want to pay.
And then don't forget, we live in a graduated tax rate, so it's not like all their income goes to 22%. Whatever lives at 10,
if
whatever lives.
if they're at that cap already, then and they take another 20 out, that's exactly what they'll pay.
Yeah, so the best thing would be to give us a call so we can run the numbers with you.
Right. And then let's go to John. Hi, John. How can we help you, sir?
Oh, hi, Esther. I had a question regarding investing some money in the market. I have a business. I'm an S corporation, so I pay myself a salary, and I have about $150,000 in my checking account. And correct me if I'm wrong, but I don't think I pay any tax on that money until I withdraw. Is that correct?
No, on an S corp you pay on the net profit.
Yeah, but until I take it out, I don't think it's a profit.
No. On an S corp, it's the net profit. So if you leave your money in the corporation, it isn't going to make. If it was a C corp, it would be a dividend that would be taxable once you receive the money. On an S corp, it's the bottom line. So if the net profit for the company after all your expenses is $150,000, you're going to pay taxes on $150,000, whether you take it or not.
Whether I take it or not?
That's correct.
So
what you want to do is you want to take a look at is there things that your business needs? Do you need new printers? Do you need new computers? If you're going to deduct it, if you're going to buy it in January or February, do it now so that $150,000 bottom line is taken out. Have you made your contribution to your SEP? Have you made your contribution to your Simple Plan? Things of that nature. So you want to make sure that before the end of the year that you've exhausted all of that money that can be tax deductible by making tax favored moves.
Yeah, well, I think I've done that. I did invest $15,000 already in a SEP account.
And did you do an employer match?
Well, I did. As far as I know, I did. That's the most I could put in.
Okay, but that's the amount that you could put in. But the employer, who is yourself, your company, could also do a match up to 3% of your salary. So that's another thing that you could do.
You say a match of 3%?
Well, up to 3%.
Up to 3%
of your wages.
Okay, of wages into the SEP. Yeah, I'm taking a note. Because I called because I'm going back and forth with this. I'm under the impression that the money in a business checking account hasn't been taxed yet, and I was wondering if I should start pulling that out and investing it in a money market account. But,
well, I mean, money markets are going to pay 0.25%. Obviously, the money is your money. You're going to pay taxes on it. So having it work for you would make a lot of sense.
Yeah, well, I'm getting an average of about 10% on my retirement account.
Okay, but if you could just move that, if whatever account your retirement's in if you take that $150,000 and put that in that same type of account, you could make that kind of return on investment as well. So, but again, we just invite you, John, to give us a jingle. We can go over everything. There's no charge. Happy to do so. And can we quickly go to Joe?
Time.
All right, yeah, we're running.
Joe, if you hang on, I can answer you offline.
Don't forget, EG Tax is officially open all of our branch offices on January the 18th. Till then, just come and visit us. Give us a call. We want to help you. Look at your financial situation. You only have a few weeks, and the Christmas season and New Year's is upon us, so we get involved in other things.
Can you take Joe's call?
Before the end of the year, give EG Tax a call. And, of course, after the end of the year, let EG Tax help you with your tax needs. Until next week, I'm Esther Gullius, the tax lady, with Tiffany Fabian, Christopher Fabian. We're here to help you. EGTax.com. Have a great week. God bless.